Okay. Okay. So it's saying that we're live now. So let's see here. Okay, cool. So what I'm gonna do is I'm gonna jump right in. I'm gonna go over what we were expecting from dollar index from this morning in the Discord, and then what we were looking for from a futures perspective and indices. So that's gonna be your YM, your ES, your NQ, or your US30, SPX, or your NAS-100, right? And so same thing is going to apply, like the zones and the areas that we're looking for liquidity and where buyers or sellers could step in. And so we'll first start off here with dollar index, looking at the daily bars every day and looking at the weekly and just looking at how the overnight price usually plays out. That's something that I'm really focused on all the time. When you look at the market open, they pushed the price down here below to 98 whole level and then just responded off that level, taking the previous day high, which was Friday's high on DXY, 98.25, and then they were started showing signs of strength in the overnight during London, right, pushing price up to like 98.50s. And so when they're starting to do that, based on where they're at from weekly and daily, it's starting to show me signs of strength, which is also signs with that on those NAS positions. If you're holding long term, you could start to see some buyers starting to take profit, which I'll kind of go over that as well as our position that we took during the live stream today. So that's what we were looking for on dollar. Not too much. I mean, we were wanting to see pretty much what this level here is going to do. And so we're inside a big of a weekly area, right? We've seen this basically close here and show signs of strength. And so ever since we've seen that, we've been identifying this daily range as well. And so we've been really having our focus on this gap here, which is going to be basically 98.50 down to 98 or 97.75. And so because we're getting body closures, which they've had manipulation to get to the gap, but they showed that's a sign of strength. And then the way that they've engineered these lows here, they're like low resistance, but at the same time, they're holding this bullish structure going into this week, right? So we're only looking at Tuesday, Wednesday, and Thursday, and Friday is still left this week. So there's only so many things that can happen on a daily. Now there always can be news that can flip candles and make areas really trend back down to lower areas of demand here on the weekly on dollar. But as of right now, it looks more than likely like we're still kind of making our way. Since we've closed higher here on H1, it seems like we're making our way up to 98.55 and possibly up to 98.70. Okay. And so I'll fit that into the bias as we go into more of the futures. But as you look at the higher time frame, we were looking for specific areas on YM, right? So there were specific areas that we talked a lot about since we're at all-time highs here with NQ and ES, right? And we've just seen this rally up since that 64 level and since 23,000 on NQ. We were also looking at the same run-up that you see across the board of just futures. Now, what we were wanting to see with YM was could they eventually come up and could they take these low resistance lows, right? Like these liquidity here at the 50,000 level, right? Like a little bit higher here. I think it was like 50,300. And so because they've rejected and hit the target, which was the psychological level, 50,000, they started to show weakness. It's definitely in alignment with the overall market bias that we're seeing, okay? And then 4 hour today, when you look at it across the board, right? So this is going to be YM on the far left, ES in the middle, and then NQ. Now, when you look at it just from a candlestick perspective, you can see that YM went up, drew on that liquidity with an up thrust, right? Right, takes this previous high area out, and then price starts to sell off. What we basically are seeing from that perspective is that if you longed inside the 48.8s or 48.7s and you got outside the range, most likely if you manage this trade correctly, you're able to scale out of this as you're delivering old highs, right? And scaling up based on certain specific rules or criteria that we use. And so when I seen shorts today on NQ, I'll explain what we were kind of wanting to see here as well. But looking across the board, we were anticipating like a move down to 49 because if the buyers are going to start giving up, and essentially giving up, I mean, they got the delivery of the liquidity, right? So if they start to take profit, like your CFD players, like US 30 players, what's really happening when you're playing futures is the real markets are happening on futures. I mean, I'm not saying CFDs aren't real because people make obviously real money, but like how the actual markets are going to be moving here is like people are going to have limits set here that are on long positions. You're going to have breakout traders also sitting there trying to have buy stops to just continue price higher, not understanding that it moves in a range, right? And so what we were anticipating was that since we started to see the sell-off on Friday, that we had this range was locked and this was our low, and that we were going to be able to start seeing a move back down to this area here, which ended up being last week's market open, right? So this week's market open, I believe I need to mark for US 30, but what I was focused on going into today's session was, because we had a high, or excuse me, we had this low and we had this high, was could we come back into like last week's area or lower and start to come back down to the demand area, and then possibly, right, if we're really bearish, start to break 48,600. And so like that was what I was looking for going in on the Discord. And then when we go into like if we were to get these moves down, and then the other thing we looked at after we had an idea of what we wanted to see was the tensions are rising over in the Middle East. And so what we were wanting to see when it comes to a US oil perspective, right, was we were wanting to see it rally. Now what they did was they manipulated price overnight. I kept saying in the chat that I wanted to see a match be striked over the weekend over there against something against the US, and I was like, oil is going to rally. So if you look at like overnight price, there was some news that come out that basically said that US ships or something were fired upon or whatever, and price blast from 101, right, all the way up to 107. Now most people would look at this and say, like, they would say like, okay, like I can't believe this happened. But for us, I mean, this is typical when we're looking at liquidity, right? And we're looking at previous day high was a good zone to see price accumulate and then push out of the area. Now, can anybody anticipate that you're going to see news that happens that fast? No. But the one thing that I posted on the thumbnail, right, was you had to be watching NQ and oil at the same time here at 9:15 going into like 9:45 when price starts to explode up again during the New York session, because of what was happening. Now, what was actually happening, okay, is you had buyers from the overnight, right, that were buying this accumulation right here, right? They're buying this overnight price over here at $100 a barrel, 101, right, like 150, like all in this area. Now, when price rallied up and took that previous day high, this is a functionality thing. A lot of individuals have on those buy orders, they have limits set at this 106.65 area, right? And so as soon as those areas are hit, that's why you see a wick go into the area and then price just exhaust here on the 15, right? And so this is 5:30 to 5:45 a.m. Prices just exhaust in that overnight because so many people are taking profit in that old high. And so what I wanted to see coming into New York, right, because this is going to be your New York open here for oil, was like 8:15 to 8:30 is this bullish candle, and then you have 8:30 to 8:45, right, price goes bearish to start, but it was about where it was going bearish, right, because to me this essentially was our last low. Price had exited this range and made this new high area here, and they left an FEG, right, they left a 1 hour fair value gap right here at that 102 level, right? So when I seen that, I anticipate the shorts, right? Because when the market's, especially when it's bullish, I anticipate the shorts when they cover, right? The buy orders have to fill. That's how futures works. Like if you're trading oil futures, right? You would have to cover if you had a sell, you would have to buy back your position, and if you wanted to go long and you felt like your market bias was changing, you would have to start buying positions. Now in CFD, you could just press sell, and then buy down here as well and wait for the buys to close out your sells. That's how CFD works. But in the real world, the real markets, futures, right, that's just not how it works, right? It's more first in, first out. So just understanding how most people play is really key. And so we've seen this also as a level of demand, right? So like to me, these special candles have special meaning of when price is coming into these areas, what let's say sellers are doing in this area, they're going to cover in these certain positions. They're going to cover inside the imbalances, the inefficiencies, the fair value gaps, and most likely the demand areas, unless they're going to get a break of structure lower and actually, you know, have a massive move. And so looking at oil, like I said today, around that 945, let me bring over the comparison of both of them really quick too. Okay, so looking at, do I have the comparison? Okay, so let's look at the comparison first. So we'll look at the comparison after I go over the NQ position that we took actually on stream. But this was the bias, you know, it's like seeing like, okay, are they going to break lower, or were they going to accumulate inside the 102 to 101.50 area, right? And then make their way up like they have now. Now, the thing about it was right at the open, they started showing signs of weakness, and they basically we only had this to work with when it come to information. So let me go back to here. So we really only had, this would have been 8 to, so we really only had this information right here. So this was 8 a.m. to 9, right? And so price had basically, like I said, made this low, made this high here, and broke out and showed signs of strength, maybe above 107, 106.50s. And that's really all we could see. Now on a 15-minute, let's see what we could see as well. Okay, going into the open here. Same thing, right? So right here at the open, this is 8:15 going into 8:30, and then the next candle would be the 8:30 open, right? And it starts to start showing signs of weakness. Now, as it's doing that though, what I'm really focused on is the fair value gap on the H1, so that area in between here and here that we talk about. But to make it easier to see is the fair value gap here on the 15, okay? So I'm watching candle closures inside of this area, right? Because I'm in the thought process by looking at higher time frames, H4, H1, and down to 15 here, that if I shorted a position as price slipped above that previous day high, then most likely I'm starting to cover this position. Why is that? Well, 106.50, if you're doing this, especially like a CFD trader, 106.50 down to 101.50 or let's just say 102.50, how many points is that for? It's a lot. It's like 400 points, right? Depending on how you look at the trade on CFD and how your broker calculates it. But that's a massive move regardless if you were to look at this from like a 20-point risk perspective, going for 100 plus, right? And it definitely produces those type of edges. Give me 1 second here. Where is that thing? Okay, cool. So that kind of fits like what we were wanting to see there. Now, when I look just at NQ, and I'm pretty sure I brought that over already. When I look at just NQ, I'll show the open and what we were seeing. We were wanting to see the buys at the open just because how price was starting to play out. Now, I did think that we were going to get maybe one more test at those all-time highs, and that the buyers that were buying from the overnight, from the super fast push down, they were going to get at least that push through the all-time high, and then buyers would exit and do the move that it ended up doing after it took the London highs, okay? And so at the New York Open, the first candle you get, right, 15 and 5 here, this is all you could work with. This is all we could see when we got that first 5-minute candle. So let's see here. So the first 5-minute candle was showing more weakness to me, right? The way that they had already, built structure. So you had a London high that was here, and then you had a new low on day that was here, right? Because the low at one point was here, and then they ended up making a new low going down here. And so when they did this, coming into the New York Open, what I wanted to see was I was really focused on 15.5 and possible discontinuation just based on how this 7:45 and 8 a.m. candle had closed. And then we weren't really breaking past this 15-minute candle, and we had a 5-minute demand pretty much set right here, right? And so I was thinking maybe they hold this area here at New York, but I was also thinking possibly they come down and fill the FEG a little bit lower, right, into this big move here, right? I was thinking maybe they come a little bit lower to fill that at New York Open. So when I'm looking for the position here, I'm not really looking for it until I get that sign of strength. And so that next candle was the sign of strength inside the 5-minute demand. So basically what I'm looking at here, let me just, give me 1 second, guys. Where is on here? Where's the coffee? Sorry about that. Okay, so when you're looking at that area from this perspective, this is what I'm looking at on the 5-minute. I'm looking at, I don't know why the box drew like that, sorry. I'm looking at this FEG, right? But then I'm also looking at this candle as a reference point of demand, okay? So I'm looking at it from like this perspective here as possible continuation because I'm looking at structure, I'm looking at line graph, I'm looking at how price is responding off of this 800 to 20 level to see if they possibly can continue to hold this and reach above that London high. And then I was wanting to see possibly like 960s and then maybe all-time highs, right? And so I wasn't really seeing it too clear in the very beginning of seeing it as a buy in that position, right? Like after this sign of strength here, 835 going into 840, I was like, it does look pretty good. Like when I was looking at like a 1 minute time frame, and then this candle here was 840 to 845, and that candle looked really good. And then that was also the 15-minute close. So at that point, all you could essentially see on a 15-minute was this. This candle right here would have been 830 to 845. So it was still showing signs of strength away from the 15-minute area and also from the 5-minute area, if that makes sense, right? So because this would have been the candle right here. And so I was wanting to long positions in here to take this a little bit higher. And I believe actually we did take long positions in here, and then we started to fill the FEG here on the 15-minute. So we had our eyes focused on this area right here, but also aligned, as you can see, on that 5-minute area. And then we also had, the 15-minute area that we were looking for here. It does align inside this 5-minute area, but as you can see, the 45 to 50 candle started to close higher than the other candles, which to me was already starting to show signs of strength. But when we took this trade, we ended up taking it on the test back down, I believe around like, let me look at the exact time, but I believe it was the test back down closer to 55, and then price just kind of went up, and then we ended up going break even when we seen a 1 to 2, and price comes back down and tests the area and then rallies up, right? So for me, the sell wasn't really the position that I was anticipating until we got a little bit higher, and I was thinking that because I thought the buy positions would actually run through the area. Let me look at the exact time that we took it and then that we got out, because the second position that we took, we ended up getting out at that London high sweep. Let me look at that really quick. So I don't remember the exact times that we took them right now off the top of my head. Okay, so okay, cool. Okay, so this is basically what we were looking at here. So we ended up getting a close higher, 840 to 845. Price started to go a little bit higher. I was wanting to get in around here, but I didn't want to chase the trade. And then as you can see, the 5-minute basically crosses all the candles here and closes higher. And at that moment, basically the demand is set, and we're looking for that pushback below here at 905 going into 910. That's like the ICT macro, and then I like to see it continue in our favor usually by the 9:15 time. Now, for some reason in here, I wasn't seeing it as clear on the 5-minute and the 15.5 and 1. So price ends up going up 910 to 915, and then closes a little bit higher here, 915 to 920. And then as you can see here, price is still stacking though because of how the structure is. Like this is a new high. This comes back in to make a higher low inside the demand candle, right? We like to focus on these demand candles on the way up. And so when that candle comes in there, that's when I found some favorable risk. It was a little bit late into the range of the move. Like not all moves are going to be the best moves, right? Our goal is to get as close as we can to under New York Open and under that 27,850. But it just wasn't confirming to me as good on the smaller time frames, but as well as like how far up we already were on a 15.5, right? So like the move that they really presented was, the move at 5:15 in the morning, but that's not in my trade windows. But I still have to be able to work with that data and understand like who's at an advantage and who's not. And so that's why I was like a little bit less confident when price came up this first time, and like we started to show signs of strength, and we just kind of peaked, right? If you see right here in this area, we kind of just peaked with this one candle right here into that FEG, and that little peak made me think, I don't know, like if they come back down into this area, maybe, right? Especially when it was 905 to 910 and they started to close back above New York, I was kind of like, yeah, maybe take a stab here at that 27,855, right? So like something more on the lines of this, right? So this was a pretty good one here. I'd say 910 to 915 with that ICT macro. And so that would have definitely produced the 1 to 3 for sure. And then say you went break even and you were shooting for at least that London high for like the 1 to 5, you would have been safe on the trade buying in the locations that we talk about. One being the demand candle, right? 5-minute demand candle. And then focusing on your order around the right time, first 15 minutes of the hour, last 15 minutes of the hour, and then also buying below opening price being New York Open, in a bullish condition if your idea is to go up to here, okay? And so that met all the requirements right there. Now, like I said, where I ended up finding a 1 to 3 was price ended up closing higher here, 15 to 20, and then 20 to 25, and then coming back down because price had responded really well the other day at 9:30. This was 9:25 to 9:30. They started showing 5-minute signs of strength. They started showing it inside that 5-minute demand, and I like that area there to extend just to get back above the London highs, right? So it did deliver a 1 to 3 on that setup, and then this also factored into more of what I was looking for from a bigger perspective from the swing trade, right? To be able to start trailing risk if we were going to get that all-time high blast. So probably could have done a little bit better there, 905 to 910, and would have found a little bit better of an R position, right? And I would have said, like I said, that where I would have started really identifying it would have been more in here, right? Like less in here, unless I'm like looking at the 5 and the 1, and more likely when price started to confirm and started to take off here in this candle in New York and take off from the demand candle that was created at New York Open. And so that's probably, like I said, the area I would have liked to attack a little bit better, but still grateful for being able to attack in here around those 27,870s, right? And then see price go and deliver an actual structure liquidity and then sell off, which was the overall goal, right? When we talk about USOIL and NQ, okay? So that was our position that we took. That's how we worked with, that massive push lower into the inefficiency looking left, and still was able to squeeze out an R multiple position, okay? Now, when it comes to the comparison of oil and NQ, and I talked about the 945, this is just some stuff you can see and kind of add as confluence, right? First 15 minutes of the hour, last 15 minutes of an hour, for your not only for your entries, but for sometimes like based on the day and what price action is presenting, sometimes your take profits, okay? So we can see from the overnight, you have oil here on the left, you have NQ here on the right. Now, as you look at price and time at the same time here, all right, so this is on oil at 5 in the morning going into 5:15 a.m. They rocket the price, right, to 106. The news, whatever come out, I have to go exactly look for the exact news. I can like send some stuff from Walter Bloomberg and Twitter and just different things, but they rocket the price Where to? 106.50, which is where? Friday's high. Now, at the same time, right, 5 a.m. NQ, price capitulates, right? So what does capitulate mean? It means to surrender. It means buyers are surrendering, which is giving up, letting go of their orders, right? And they've been buying this position probably since in here, right, in the overnight. And so when price capitulates like this fast, what happens is it creates FOMO. This 115-minute candle falls from 27,288, right, like 290s, let's just say, yeah, 27,890s, all the way down to, let's see here, one candle falls. All right, let's go off the bodies, like at least 200 plus handles. Okay, now people are gonna capitulate. They're gonna freak out. They're gonna, sell inside liquidity. We were looking for this area to be delivered. So if anybody's sold under here, if you can see what I'm saying, is they're selling at the low of the day. The day open started here, right? 50% of the day. This is the high. This ends up being like the low on yesterday, right? So the 50% is gonna be this 27,800 level. Okay, so coming into the day, that's something you really want to know, is like the framework of what's going on. And so the key to this today for me was once we seen the liquidity run up 9:30 to 9:45 and it didn't go break structure, right? Like it didn't go break all-time highs and reach higher than 27,950 and want to reach higher. It was a clear sign that buyers were wanting to exit this position, especially the ones from 27,700. Okay. Now the timing. Now look at oil. Okay. Oil had been selling off since 5:30 in the morning, all the way into our New York open session, coming into a H1 demand, right, which is this level here, and at the same time, inside that demand, inside that inefficiency, right? So this 15-minute imbalance. So this is essentially an imbalance area, right? Or an FEG, right? This is some ICT people call it, right? This area is very key on if shorts are going to cover and buy orders are going to start to fill, right? What we're going to see on NQ. Now, as you look, when I hover over 9:30 to 9:45, when I hover over that on oil, look what's happening on NQ. Buyers are starting to cover their oil short positions. At the same time, we're inside that fast push-up candle on NQ, but that candle can't break the structure and go above 950s. Now, the very next candle of oil, right, 9:45 going to 10 a.m., right here on the left, that price explodes out of that accumulation area, right, below its London open, below its daily open, which is the market open, and below New York. These are all key signs of algorithmic price. Okay. Now at the same time, you got a 15-minute bearish candle on NQ, but at that exact moment, you can't see it as bearish, right? It's actually still looks like it's kind of stacking, but it's trapping people in the wrong area. Now, the next candle, which would have been 10 a.m. to 10:15, that's where you get your first break of structure here on NQ, right? Your 15-minute bar here, 10 to 10:15 closes lower, right? And then the next candle, 10:15 going into 10:30, you get the true break, and you can see prices really starting to break down, and that low of day is starting to get very weak at that point after the crown formation breakdown 80 level, right? 27,880 all the way back down to low of day. Now the key to this though was news can push price, right, to hurt traders. They like to come out with, there's something going on in the strait, ships are being fired on, just any kind of news that makes traders start forming opinions and acting and behaving in the market. But if you're just really watching and they're leaving breadcrumbs, they're leaving little signs of things that they do, right? And these are the key signs, right? Looking at this 15.5, looking at higher time frame context and understanding where you're at when it comes to supply demand and where you're at inside of these expansions inside of fair value gaps, right? And so that expansion up, like I said, 10 a.m. to 10:15, that's where they start to break lower on NQ, and then price eventually at 11 a.m., right, an hour later, 11 a.m. going into 11:15, delivers the low of day, right? So now this is what's happening and why you're seeing such a quick move back, right? So like When this move delivers that low of day, and then you see the next 11:15 to 11:30 candle deliver, and it goes almost 100 plus points, what you're seeing is short covering, right? From the 27,900 area, 27,880, right? That's what you're essentially seeing. At the same time, you're seeing short covering and buyers step in on oil, which is giving you that correlation to understand how to see the market. Now, sometimes, yes, they do move similar and together. That's just part of it. But understanding from a higher time frame context is really going to help you be able to, if you're not seeing specific things on NQ like that, like I said, that push through all-time highs, to start to cover a position as we're kind of stacking because of how the overnight presented the price. So we'll see what they do for tonight's overnight, but that's really all I wanted to go over was really that 9:40, that 9:30, 9:45 time, how they filled the FEG, and then how oil from a perspective of what the tension's going on in the Middle East, right? So I'm gonna go to daily here. Let's actually stick with 4 hour. With the tensions going on in the Middle East, and if they continue to have trouble with getting through the strait, the price will continue to rise back into the supply area here, 108, and possibly back into the 109, 110s if it's going to continue strong, right, for oil. So that's where I'm really focused at this week, is watching how they play inside this 4 hour candle here, right? If they can stay above 103, right, $103 a barrel, then I could definitely see them continuing up back into that 108, possibly even overnight, right? So let me look at the 1 hour here really quick. Yeah, and the way that they responded, they ran up to that price overnight, came back and responded inside demand of 102, and then have continued up. The only thing I really see going into the end of the night is going to be, like going into tomorrow, is how they actually respond inside the new range, right? Do they hold this area from here to here now, right? And so what I'm essentially saying is, like, can they come back down, fill the gap, and then continue to go? Or can they possibly come down to demand, which this is our demand candle in this situation, back where New York Open was yesterday, and then find buyers back in that price again of $103 a barrel, right? So it just really depends on what they decide to do in the overnight. But based on structure and what I'm seeing right now, I'm still looking for prices to reach into this FEG here, 107.50, right, which would be clearing previous day high at this point. So we'll see what they do. We'll also see what they do here, obviously, with NQ. Let me look at the 1 hour here really quick before we hop off. And going into tomorrow, so it's the same thing. I mean, there's a massive candle here from Thursday, April 30th, 2026. That has, I would say, a lot of demand probably built up in 27,350s up to 27,400. So depending on how they hold the overnight price and what London looks like, that's what I'm really going to see. Is news going to come out, and push the price of oil up crazy and push us lower into better areas of buying zones like 27.5 or, just lower, right? Or is there going to be, a point where oil possibly sells off and we go ahead and just make a new all-time high? I really don't see them making the all-time high in the overnight on NQ, but I could be wrong, right? Now, just very quickly, I'll go over the NQ position here. It's the same thing. NQ and Nasdaq-100 are essentially the same thing. It's just this is where you can swing the CFD trades. And so we're looking at this from a weekly perspective, right? Every day that we hold on to this 23,200, you have to pay fees on the trade. But let's say you've partialed out when price made the all-time highs. So like basically price comes up, makes all-time highs of a 3,000 point move up to like 26,400s. And so now what I'm saying on these swing trades is if we have our entries down here, right? If we have the entries down here like 23,200s, then every day and every 4 hour candle now becomes really key for me, because every time we've made a down candle, now we've made, like this here, we made higher high, higher low, higher high, higher low, and then a new high. So this is the last down candle, right, in the trend going higher right now, like as of right now. Like if it came down and made a new down candle and then went higher, then there'd be a new one. But as of right now, for those trailing risk trades, right, so it's anywhere from 23,000 to 23,400, let's say you bought the CFDs with us, you could be essentially trailing your risk right now to 23,000 or 27,000. So from basically 23,200 up to 27,000, how many points is that? All right, so that would be securing like 3,930 points, right? And then whatever price decides to do. But you got to understand there's people looking at this from, they play long term, they play weekly, daily, monthly, they have long positions and time expires, etc. And so there's different ways to play this game. You just have to realize that there's other people that have these bigger positions and they have these long term positions that they're managing from the same perspective that we manage all the way down to a fractal move, right? And so really wanting to see how this week closes, right? Does it close bearish? Do we have our first close bearish since we've rallied up? And then do we start to break back down possibly to where price broke out the first time, which would be in this area here, 26,400s, right? That's the old area of resistance, could essentially become the area of support, right? But until then, right, when we wake up and when we play futures positions right now, we're looking for what oil's doing, right? Where oil has liquidity, and then is there a position to either continuation buy, right, that looks simple, an A to B on an NQ trade, or and then really protecting yourself because we're in all-time high territory where price could just fall out of the sky, right? And so you definitely don't want to be playing without a stop loss. But last thing I'll look at, like I said, is we talked about the NQ levels. We talked about 27,500 here, and so we'll see what they present overnight. But I appreciate you guys watching, and let me know if you guys have any questions. Just DM me, and then inside the description of this video you can find the free Discord, right? The free Discord community where like-minded individuals and traders are coming together. And then we also have the premium trading floor where you can actually trade live with me these concepts that I'm talking about. And as well, you'll have a discount on the future course that we have coming out where it's going to be basically an A to B. It's going to be basically I call it a 1 through 4 academy actually. So the basics, right? So just, how I see the basics, really clean, easy, really going to pull away from like stuff like Bollinger Bands and stuff like that, just like real easy stuff. And then there'll be more of a boot camp that kind of goes more into the timing of the trades, the first 15, a little bit more nuance of those things. So definitely just click that link in the description and join the group. And then if you have any questions, just DM me. It's RickeyTrades on all platforms. So appreciate you guys watching. Have a good rest of your day, and I'll talk to you guys tomorrow morning on the New York Open.